everyone. I hope your Ethereal is going great so far. I'm Min Teo, and I'm the investment partner of ConsenSys Labs, leading the venture investments team at ConsenSys. It's my pleasure to be hosting this panel with some of the investors that I really respect and admire. And we'll be discussing how we assess growth and adoption on decentralized protocols. But first, let's kick off with some brief intros with our awesome panelists. Michael, do you want to get us started?
Sure. Yeah. Thanks, Min. My name is Michael Anderson, co-founder here at Framework Ventures. Previously worked in traditional technology companies, building product at Dropbox and then Snapchat. Started a tech company, startup in the digital collectible space, and are now focused on the DeFi ecosystem with Framework.
Great to have you, Michael. Ash, do you want to go?
Ash, are you on mute?
Can you guys hear me?
Now we can hear you. Great.
Can hear you now. Ash Egan, partner at Accomplice. We're early stage funds, often the first check into companies. I focus entirely on crypto at Accomplice. And before Accomplice, I was at ConsenSys. So I had the pleasure to work with Andrew and Min.
Thanks, Ash. Spencer?
Cool. Hope everyone can hear me. I'm Spencer Noon, head of crypto investments at DTC Capital. We're a crypto native fund based in the Miami area. I'm also the creator of Our Network, which is a weekly newsletter that tracks the network health of crypto projects in the space and using on-chain metrics and analytics. So thanks for having me.
Thank you, Spencer. And last but finally, and definitely not least, Andrew Keys.
Hi, everyone. We're slightly different. DARMA Capital, Digital Asset Risk Management Advisors, is a commodity pool operator and a commodity trade advisor that's registered with the CFTC. Our goal is to achieve quantitative systematic alpha on Web3 protocols such as Ethereum. And prior to this, I helped build a little company called ConsenSys.
Yeah, we like to keep in the family here, don't we? Great, cool. So, starting with Ethereum, we're quickly approaching the 5th anniversary of the launch of Ethereum. We've got a vibrant ecosystem. Seems like there's a new project popping up every other day. Kind of like looking back to where we were and where we are today. Are we where you thought we would be? Are we where we should be? And more importantly, how do you sort of measure growth and adoption in that regard? What are some metrics that you rely on to see how we're doing on that front? Spencer, you want to take a go?
Yeah, sure. Happy. So are we where I thought we would be? No, I think it's really hard to project this stuff, right? I think, rewind back to 2017, early 2018, Ether is trading at, $1,400. And I think we all thought the future would look a lot brighter, right? It traded at many more multiples of that. And it hasn't. We're around $200 today. But does that mean that the kind of progress in the ecosystem has lagged too? No, I've been totally surprised with where we're at. I think you can look at things from a user perspective, the platform, the community really coming together. It's all been, I think, really encouraging. And I'd say the biggest thing that I underestimated was how quickly DeFi would come together. In December 2017, I think we had maybe less than $10 million of assets locked in DeFi protocols. And today we're at 800 and something million. We've already crossed $1 billion at, a month or so ago. So that's just explosive growth, right? And the user growth is really promising as well.
So I would agree.
Go ahead, Andrew.
Go ahead, Mike. Mike, after you.
I would add one thing I would say about overestimating and underestimating is back in 2017, 2018, the use cases of digital collectibles or games, content and commerce being other potential application categories, expecting that those would happen simultaneously with DeFi or even before that, just given the consumer appeal. So underestimated how quickly DeFi would come out, but definitely overestimated how quickly it would take or how long it would take for other application categories to come out.
So I underestimated the developer community. I think it's the most vibrant developer community in the world, and I overestimated the speed to actually build the plane while flying. Obviously, these are very difficult distributed systems technologies that are being built, and obviously Ethereum 2.0 is taking a little bit longer, but I think it will be worthwhile. With respect to what we look for in terms of data points, I would bifurcate it into kind of quantitative and qualitative. On a monthly basis, we're looking at kind of unique addresses, network utilization, hash rate, gas usage, assets in DeFi, and then more of a kind of a qualitative metric. We look at kind of the sophistication of smart contracts. They're getting definitely more complicated. You can check on the GitHub repositories and see things like the various clients that are building on the test nets for ETH2. So I think we kind of there's a little bit of an art and a little bit of a science to looking at this.
Yeah, and just to add, I think some really good points. I think the goal here, whether it's DeFi or other categories, is to have venture scale type businesses being built on chain, and we're seeing that. I'm not saying do they have to be venture backed, but more venture scale, and we're seeing that happen at a super rapid pace. Some really cool stuff, obviously, happening in DeFi today.
And that's all without having a quote next generation smart contract platform, right? I think you look at a lot of the narratives that were happening in the space, especially in 2017, it was, we need this big, fast blockchain to be able to process this many transactions per second. Otherwise, this whole space is for naught. And I think what we saw was that scalability actually happens on a number of vectors. And yes, transactions per second is big, but so is collateral, right? Ethereum has $20 billion of collateral that it can use in other applications. It can suck in different assets like fiat-backed stablecoins and real estate, and the list goes on. And no other smart contract platform currently comes close to doing that. And so I think, there's been a lot of different ways that I've looked at it. And I too, kind of like Ash, have been surprised at how fast it's going.
Yeah, and just to pull on that a little bit more, Spencer, in terms of adoption, it seems as if all roads lead to DeFi. Do you think that sort of Ethereum's, I don't like this phrase, but, killer use case, like being the value settlement layer, and how does it overlay with other Web3 applications that we're also excited about? Are there is there anything else that you're excited about in the near term, or do you think it's mainly going to be DeFi?
Yeah, no. So when I was thinking about, as I think about this question, it reminds me of this Jeff Bezos video from way back when he was just building Amazon, and someone gets him on the street and they say, Jeff, tell us about Amazon. Why are you building it? And he goes, well, bookstores for the internet are actually the first best use case. And I think that's pretty similar to how I think about DeFi for Ethereum. Finance is the first best use case for Ethereum. And I think with all the financialization and infrastructure that we've seen over the years, we're now able to kind of leverage permissionless protocols and other primitives in really cool ways. And so I think the other types of applications will slowly emerge, and it'll probably start by kind of bringing those financial tools to other asset classes. So like art or gaming, right? You can now bring Uniswap or some other DeFi infrastructure to it, and then we'll slowly surpass it afterwards. That's at least my mental model for it. I'm not interested in what happens kind of outside of DeFi, but I think for the here and now, especially over the next few years, that's where it's at.
Anyone else have any thoughts on that?
So I could devil's advocate.
Okay, let's go with Ash first, and then we can. Or go ahead, Andrew.
So I could just.
We want to hear the devil's advocate.
From kind of the institutional and investor perspective, I fear that we have a bit of a chicken and the egg. I think, if we can talk about, DeFi coming to the institutional investor, I think probably the closest we're going to get in the near term, and I would say near term meaning the next year or two, is someone like Paul Tudor Jones buying regulated CME Bitcoin futures, not actually custodying the Bitcoin himself. And to now get from there to actual decentralized financial protocols, there are a few kind of non-starters. Unfortunately, at this point, one of the main ones is striking NAV. Being able to, I personally use InstaDApp, and I refinanced from a maker interest rate that was at X to a compound interest rate that was 80% of X. And that process was seamless on InstaDApp. I thought it was excellent. It worked very well for me personally, but trying to extract that information and giving it to a fund administrator or an auditor is next to impossible. And I think that while you've got $1 billion worth of assets locked in DeFi, I think we've got $80 trillion in assets in the global economy. And we've got a long way to go before onboarding that and really being able to issue credit from kind of an institutional perspective. So I think that this is amazing, wonderful work. We are in the first pitch of the first out of the first inning still, and there's a long way to go.
Definitely, Andrew. And hold on to that thought, because I want to come back to it after. But Ash, please go ahead.
So I think things beyond finance will live on chain in the long run. So I don't think it's just DeFi, whether it's Ethereum, these other layer ones, I think is going to be fascinating to watch over these next few years. And DeFi is getting easier to use. There are teams working on abstraction. There's new offerings that are coming out. So I think that's great. I think what I've thought through a lot is, the DeFi activities today, is this the participants from 2017? Is this just the same group of people, 3 years later? I tend to think it's probably just, hearing from friends on Wall Street, asking about MKR or, these other assets. I tend to think it's grown a little bit, but, I think as a industry, we always have to think around, how do we welcome new participants? Is it better offerings? And, I think when I say DeFi, or when we all say DeFi, what does that actually mean? I think ultimately, we're trying to build sustainable on-chain businesses here. And whether they're completely decentralized, quasi-decentralized, I think some folks are more focused on the decentralization piece. I'm more focused on, can we build incredible businesses and protocols on chain?
And maybe I'll just step in for a second. Fully agreeing with most of what has been said. The only additional point that I would add is I kind of get stuck on this concept of when are the institutions coming, where are they coming from, and how much money are they bringing with them. I think if we're really successful in building a decentralized ecosystem that Ethereum could potentially become, with a diversity of application categories like DeFi, content, commerce, what have you, it's not going to be the traditional players that are going to be the ones that are acting the same way as they have been in Web 2 and in previous iterations of the internet. It's going to be new things built from the ground up, purpose built for this industry and for this technology. So the concept of a bank might not exist in the same way that we know it is today. And it's not maybe a huge deal for that bank to come on board to the Ethereum ecosystem because we're in the process of building it already.
Yeah, I would piggyback on that just quickly. There was an article that came out, I think, recently somewhere in the community where they were talking about kind of euro dollars and this Eurodollar ecosystem that's billions of dollars. And we're starting to see kind of the early signs of fiat-backed stablecoins being a way for like a liquidity source in this like Eurodollar industry. And so that's different than what JPM and Goldman Sachs are doing in New York City. And I think it just kind of shows that this might not play out the way that we think it is, with like us showing up at the doorstep of Wall Street and them kind of like collecting us with open arms.
Definitely. I think we all have a love-hate relationship with our bank. So I certainly hope you guys are right in that regard. I think as I look back on the last several months, I think there have been a few events that highlighted some vulnerabilities of DeFi protocols, events of Black Thursday, several hacks and arbitrages. How do we strike a balance between rapid product iteration and security? I think back to a conversation I had with someone who's been in the space for a long time, and he was like, yeah, I've never put any money into any of these DeFi protocols. I don't intend to, I don't trust it. It's like safely tucked away. And if you put yourself in the shoes of an early stage founder who's trying to get something off the ground in DeFi, what advice would you give them in terms of how they sort of balance security and product iteration and getting user adoption that way?
Use Mythex and ConsenSys diligence. These things have to be audited. They custody real people's real assets, and it's a tremendous responsibility. I think you raise a great point on the tension between move fast and break things, and now the fact that we're not just transferring communication, we're actually transferring value, and I think the delicate nature of that asset. I think that you could almost, I think that there could almost be milestones where you can go proof of concept with $100,000 and kind of milestone it out and say that this has been formally verified or certain amounts of audits and then kind of milestone out the progress. I think that there are lots of the iterations of these DeFi protocols have phase zeros that are not on that are not getting attacked or in a Byzantine environment before they go live, and they are kind of hacked after. So I think that if we could figure out some type of milestoning and some type of gating function where we don't have too much and definitely not copy pasting like what dForce did. I think that should be almost mocked in the industry.
So I'll piggyback there. I think the other aspect here isn't necessarily just around security or the amount of dollars or value that's tied into these ecosystems and the level of security with which they have been audited, checked, controlled, what have you. The other way that I think about this question, and maybe not as it is to a hack or a vulnerability, but just general system design, there is rapid iteration of development, of product development, and full decentralization of decision-making are fundamentally at odds with each other. You lose the ability to act quickly, make decisions as a core protocol team the second that you start moving to a maker governance model, voting on decisions, protocol upgrades, and that just slows down iterations and slows down progress. So one thing that we advise a lot of the core teams that we invest in is what is that right balance to strike? when is it time for you to say, okay, I'm ready to throw over the reins of this protocol and hand it off to the community, and here's the governance model, and here's how the whole thing works. Like, here are the keys to the kingdom. Obviously, that shouldn't happen very rapidly, but there needs to be a gradual process, and that needs to be something that the team decides with the community, with a governance model that makes sense for the product and the market. And it's something that the best are trying to figure out this exact problem now, and we don't have a one-size-fits-all solution, but it's another aspect of this question that I think about a lot.
I think you also
And
have
Michael,
to look
just
at it
to-
with layered.
Go ahead, Ash.
Yes. So another way of looking at this is you look at sort of what's happening within DeFi from a layered approach, or like building a house. At the smart contract layer, I don't think you want to be innovating too much, right? You want audits. Like, there's just table stakes to actually have something that's going to be performant. I think, though, the move fast and break things mantra can be applied, though, to the UX UI sort of higher in the stack. So I think it really depends on, like, we should be pushing, new products, new offerings, all these things, but I think they're table stakes to ensure security, and definitely some emerging best practices and things you just don't want to do.
Yeah, I think everyone's had some really good points here. Like, this is something that we're obviously just going to have to continue to get better at as an industry. We're clearly not good at it today. I think every single week over the past months have had some type of DeFi security incident, and so that's obviously got to change. I think one thing that resonates with me. I was watching an earlier panel in Ethereal, and Felix from Set Protocol had this idea basically called progressive security. And the idea is that when you kind of launch your application, you don't need to be as crazy with respect to economic audits, security audits, technical audits, informing your users, things like that. But as you scale AUM, as you get product market fit, it's up to you to continue to invest in like your user safety. So I think it depends on where you are in the life kind of cycle of your company. But one thing I think a lot about too is just the absolute early stage. You don't need money to inform your users that they're using something that's experimental. You don't need money to put a huge modal on your screen like My Crypto did back in the day that made you click through every single warning before you got to use their product. We can do these things today, and we can do a better job of them. So yeah, it's a really tough question, but I think there's ways to address it now.
Yeah, I think those are all great points, Spencer. It really reminds me of, Robert Leshner of Compound, and how he talked about how they had, a Compound V0, and having that DNA in the team of like constant monitoring and constantly thinking about security and, customer fun since the beginning. In a lot of ways, it feels like it's more of like a mentality as opposed to like, just getting certain, check marks on the roadmap. So can't agree with you more here. I think, thinking about where we are today, usually, I have the pleasure of seeing you guys all at conferences and catching up there. But instead, we're sort of in a Zoom room, jamming in front of like, a couple hundred people who are watching us. But, with the global pandemic, economic crisis unfolding, insert your favorite sort of money printer, go brewer meme over here. Like, how do you think that impacts the adoption of crypto generally? Do you think, it'll help it 10x, 100x? Do you think, the world has too many problems to care about crypto? What are your thoughts here? Andrew, do you have anything to share?
Sure, I absolutely think we're at an inflection point. The money printer go burr is absolutely right. I think we're right now in a fog of war, and a lot of people are responding to their own familial and kind of, let's say, one generation crisis rather than kind of the proactive steps that we're going to be taking in kind of ameliorating and solving these problems. That said, I think this will absolutely expedite the need for digital currency. So that's, fiat-backed stable coins, central bank digital coins. I think that this is going to expedite that, as we don't want to handle menus in a restaurant and dirty paper dollars. I think that one's easy. And I think that for years now, we've understood the fragility of I would say and the subjective nature of centralized database systems, and I think that this is just going to accelerate the need for decentralized and resilient systems. That said, and I do agree with, I think Michael and Spencer both kind of touched on the points that you don't necessarily have to go to the enterprises to get this change. You can build this from the bottom up. But I do think that there is a certain need to communicate with the pre-existing world. And I think the Procters and Gambles of the world that run the largest supply chains, for example, are going to need these systems. But right now, they're going to be putting out their own fires. And I think that in that respect, you're going to see that the corporate development budgets are going to be less because they're just going through their own internal crises at the enterprise level. So I think that there'll be a tension in that part where you probably won't see as much development from the larger institutions that were just starting to get comfortable with these technologies. Paul Brody today was talking about if he had $1 for every enterprise that could come out of the closet that they want to use public permissionless mainnet as soon as we get things like ZK Snarks ready and rocking. And so I think that we're going to see a slight delay in that regard.
I thought it was fascinating to see the Udemy announcement around, from the prior month, there's 5x the amount of folks that were interested in crypto-oriented classes. I think right now people are at home thinking about, can they go back to their prior jobs? Do they need to retrain themselves? And I think crypto is a industry or category that people are looking at and has a very exciting future ahead. And so, we're not going to convert all of those individuals, but I think that this is a time where a lot of people are thinking about, taxes, money, just in general, the idea of it, and even, their prior careers. Is this the time to refocus? I think, crypto's well positioned for a variety of reasons.
Definitely hope so. I think we're nearing the end of our panel. So I have one last question. There are obviously some other base layer protocols up and coming. And how do you sort of see DeFi adoption playing out on some of these other chains? Will Ethereum continue to fend off these ambitious newcomers? Spencer, Michael, you're smiling. Yeah. Anything?
Yeah, I can take it to start. So I think this one is pretty interesting. It's a great question. I was just on another panel with a bunch of investors, and I was surprised because the consensus on that panel was that they really didn't think that DeFi was leaving Ethereum, and that was just such a marked difference from the last year. Like a year or two ago, I think most people thought it was kind of up for grabs. And I think we're seeing the network effects and defensibility of Ethereum's DeFi ecosystem. They're just super strong. And so, we're seeing now a lot of two-way bridges being built with these other next-gen smart contract platforms where they want to be able to send their assets to Ethereum. And then obviously it comes back the other way, but who knows how much it's going to get used that way. I think they'll have to really develop their own kind of competencies and niches. And that could come with scalability, right? Ethereum 1.0 can only do so many transactions per second. There's a fee market there. It costs money to do computation more than it does on some of these other blockchains that have had their block space subsidized by venture capitalists, right? So I think we could see a future in which you have the finance kind of decoupled from the computation. So we'll have to see, but I do believe we'll have a future in which people won't know exactly what smart contract platform they're interacting with at the end of the day. It could be a mixture of many.
Fully agree there. The only things that I would add, and we've looked at DeFi across different chains, Polkadot, Cosmos. It's definitely something of interest for us. A few days ago, Synthetics launched their layer 2 demo using the Optimistic virtual machine. I don't know if anybody's been using it or playing around with it. I'm currently under competition with Vitalik for top trading rank. It is it's the best example of a consumer application on Ethereum that I've seen yet. It's less than 250 millisecond speed transaction times. It feels like I'm using Binance or any other of the centralized comparables. That gives me hope that it basically negates most of the reason why anyone would want to go through a high throughput blockchain in lieu of Ethereum for DeFi. More innovations like that are just going to continue to build this network effect, as Spencer talked about. It's just going to get stronger and stronger over time.
I think the last thing I'll add is I think you have new sandboxes. We are large investors in Near, Coda, and Flow, and all three of those teams have very different approaches in terms of what will be built on chain. The longer term, it's tough to see how all of these, how it's all going to play out. Is it one chain? Is it sort of five? Is it geographically broken down? Obviously very curious how it all pans out. But I think over the next 2 years or so, it's going to be very complementary. You're going to have new experiences, offerings, products, dApps built on some of these new layer ones. Ethereum will continue to grow. DeFi will continue to grow. So I look at it as a positive sign.
Agreed. I think that Ethereum will continue to grow. I think other protocols will grow. I think it's way too early to talk about any of them because none of them have shipped in a meaningful way, aside from proof of authority networks, which is really, I don't think counts. And so we're in the first pitch of the first inning.
Awesome. Some great points here. Well, I hope everyone stays safe and healthy throughout this lockdown. Michael, we're rooting for you with this competition. And hopefully we can all reconvene in a year and talk about, how we have 20 billion or 50 billion locked in DeFi then. But thanks everyone for your time. This is great. Bye.
Thank you.
Thanks, Ben.
Thank you.
Bye-bye.